Hello and welcome. You're watching ET Markets. I'm Tanya Neja. Well, Sensex reclaimed the 59,000 mark on Thursday after a gap of 4 months. US inflation data for July also raised hopes that the Federal Reserve may not be that aggressive in hiking interest rates in its next meeting. Also, foreign institutional investors who were so far missing in action now seem to have swapped places with domestic investors. So, is the worst behind us? What are the technical charts suggesting? To discuss this and much more, I'm going to be joined by a very special guest today. We have with us Mr. Osho Krishan, Senior Analyst at One Ltd, who will share the technical outlook on the markets and the stocks he's betting on at this point in time. Thank you so much, Osho, for joining us on ET Markets. So we are seeing foreign investors beginning to get interested in India once again, and Sensex also reclaimed the 59,000 mark. So will the momentum continue? I mean, since the coming week is a truncated one, with Monday being a trading holiday, what do the technical charts suggest?
Looking at the overall technical perspective, from the past 4 weeks, the bulls have been very adamant. They are trying to gauge all the intraday corrections and they are having a very strong strength. So this week was also a truncated one, and because of that also we have seen there was some kind of tentativeness at the higher levels, but no doubt the positive stature for our market stays on a very strong front. So we are little bit optimistic for the upcoming week also, but looking at the overall technical perspective, we are even on the overbought region. So as of now, 17,780 to 17,800 levels is the first resistance, which is also the trending sloping trend line, which can act as a very strong resistance for our market, because the entire 4 weeks has been very positive for our market. So we might see some kind of profit booking from the higher levels. No doubt the positive stature continues on the bullish side, and any intraday dip towards 17,200 to 17,400, which has been a very strong base for Nifty, should be act as a very strong support, and any dip towards these levels can opportunities can be look forward upon 17,200 to 17,400 levels. On Bank Nifty front, we have witnessed a strong breakout on Bank Nifty, and Bank Nifty is having a strong resistance around 39,300 to 39,500 levels, while on the downside we are having a strong support at the unfilled gap of 38,500 odd levels. So any correction towards the unfilled gap can again be seen as an opportunity to go long in the counter. So overall, the positive structure from the global market, because the global market has been very positive, the FIIs are keep adding the position in cash market and even in the future segments also. So that has been also contributed a lot in our market, and we are expecting that this should continue in the upcoming period also. But looking at the overall momentum, as bulls are being appeared, a bit of tiredness can be seen in the market, because at a higher levels we can see some kind of tentative moves. So that's why we are not very much bullish in the market, but thematic moves and stock specific front, we are having a lot of potential in many of the counters, and one can look for counters outside the index for coming period.
Okay, absolutely. And now let's come to the sectors that are looking attractive at this point in time and the stocks that you are betting on.
Yes, on technical perspective, there are many counters which have given a very strong breakout. The first one is from the steel sector, APL Apollo Tubes. This counter has seen a strong breakout. It is trading at all-time high levels near to 1100 zone. So this counter can be looked for accumulation. On the downside, the support or the stop loss should be placed around 1020, and on the higher end, 1260 should be the immediate target for short-term perspective. The next counter is from the insurance sector. The company name is SBI Life. SBI Life have seen some kind of correction from the recent highs, and in the last trading session it has given a reversal kind of pattern. So it is looking very positive, because the base has provided very strong support for the counter. So any correction towards 1270 to 1280 should be seen as an accumulation level for the counter. On the downside, the stop loss should be placed at 1220, and on the higher end, we can expect a target of 1400 from a short-term perspective. The third counter is from the consumer durables, which is a Voltas. Voltas has also gained traction from past 2 trading sessions, and we are expecting that this counter should also gain the traction in the coming weeks also. So this counter is having a strong base formation near 990 to 1000 zone. So keeping a stop loss of 958, which is the recent swing low, and we are expecting the target of nearly 1080 in this counter in very short span of time. The fourth counter is from the auto. Ashok Leyland is forming a strong base for the time being. It is trading above all its exponential moving averages. So the positive stature in this counter continues, and we are expecting a target of nearly 154 in a very short term period. And on the downside, the stop loss should be maintained at 141 levels. And the last counter that one can look for the short term perspective is UBL from the beverage company. UBL is looking very attractive at the current zone. 1630 to 1640 should be the accumulation zone. On the downside, 1570 should be the stop loss, and we are expecting the potential target to be 1720 to 1740 in the near term period.
Okay, absolutely. So APL, Apollo Tubes, SBI Life, Voltas, Ashok Leyland, and UBL. These are the 5 technical picks coming in from Osho. On that note, thank you so much for taking the time out and being with us here on ET Markets today. Thank you so much.